Hello, you are welcome again on our trading lesson. As we'll be talking today about trading time frame redefined. We have talked about trading time frame before, but some people might be confused. So I want to make some clarifications. Now we'll be looking at time frame for higher time frame and then lower time frame. Which one is most recommended? That will save you a lot of stress, a lot of losing and frustrations, all of those. If you have read that book, Candlestick Trading Bible, severally I've recommended it that you read it. That Candlestick Trading Bible, when you read it, it will let us to know that there are two major time frame. In fact, two best time frame to use, which is daily time frame and the 4-hour time frame. Okay, if you're a swing trader, they use daily 4-hour time frame, and then as a day trader, they use daily time frame. But to avoid those type of confusions, I prefer to just use either the daily time frame or the 4-hour time frame, or I can use both to monitor my chart. Although in the Candlestick Trading Bible, over there, they're just doing price action. So it is what you see on the daily time frame you go with. Unlike us, we are using smart money concept. So what we see on the daily time frame, it can help us to decide our move on the lower time frame. And what we see on the higher time frame, or using 4-hour, it can help us to determine what to see on our lower time frame using the 30 minutes time frame. Now, we know that we can use the daily time frame and the 4-hour time frame as our higher time frame. But how do we select our lower time frame, our corresponding lower time frames? So that is what we are going to learn next before we come back to this place. All right, so coming back to this MT4, MT5 type of a trading time frame that you show to us, it's just logical. Let's use our logical mindset. Before trading view become popular, people were using their MT4, MT5, and this is the exact time frame that is there. You cannot customize any other time frame. You cannot add 2 minutes, either 3 minutes, all of that. It is what you are just seeing here. You are seeing MN for monthly, and then this is weekly, daily time frame, H4, H1, M30, M15, M5, and M1. These are just the major 9 time frames. 1, 2, 3, 4, 5, 6, 7, 8, 9. These are just the major 9 time frames that you can use to trade and monitor price and monitor what the candlesticks will be doing. If you want to climb different steps, for you to arrive faster, you cannot just be moving from step 1 to steps 2. At least when the steps they are very close together, if you skip a step and move to the next one and step on this, it will save you a lot of stress. This will save you a lot of stress and time. And if you move, you skip one step and move to the other one. You skip one step and move to the other one. You skip one step and move to the other one. So this is just the way to select your time frame. The first time frame here will be your higher time frame. This is like the monthly time frame now will be your higher time frame. Then the following time frame is weekly time frame. But we will not use that. We are going to use what? We are going to use the daily time frame. So if you are using monthly time frame as a higher time frame, you will skip the next time frame and use the what? Daily time frame as your what? Corresponding lower time frame. Now if you are using the daily time frame as your what? As your higher time frame, you are going to skip the H4 and use the what? H1 as your lower time frame. Hope you are getting it. Then if you are using the H1 as your higher time frame, you are going to skip the M30 and use the M15 as your what? As your lower time frame. Then if you are using the M15 as your higher time frame, you are going to skip the M5 and use the M1 as your lower time frame. All that is very understanding. So if you are doing that, all you have to do is move. So as you are doing that, all you have to do is what? You use the first one, you skip what is next and move on. 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 That's how you determine your higher to lower, higher to lower, higher to lower, higher to lower, and then higher to lower. That is just how it is. Now if we want to move from there, you see the next one is what? Weekly time frame. Then H4 will now be what? The lower time frame. If H4 is the higher time frame, M30 will be what? The lower time frame, as we are skipping the center one. Now if M30 is the higher time frame, M5 will be what? The lower time frame. That is where it ends. Then if we are now using the daily time frame will be our higher time frame. Then M1 will be what? Our lower time frame. If you are using the H1 as our higher time frame, M15 will be what? Our lower time frame. This is just a way to make it logical. You can customize it on your trading view and do any other time frame, but those might be difficult and confusing. That is on expert level, but to make trading easy and all of that, you just have to follow this type of logical way of selecting your time frame: higher time frame, lower time frame. So the two major time frame we'll be using is what? The daily time frame, and then you can see that the corresponding lower time frame for it is what? The H1 time frame. So higher time frame and then lower time frame. Then the other one will be what? The H4, we will now serve as our what? Higher time frame, and then we will now be using corresponding M30, which will now serve as our what? As our lower time frame. All that is very understanding. Now let's go back to our chart. So back on the chart, you see that the daily time frame, if we are using it as a higher time frame, it's just like the market is bullish right now, right? The market is bullish. So let's say when the market is bullish on the higher time frame, when we come to the lower time frame, we might be seeing different type of structure, like selling structure, but the time we are going to tag along with the higher time frame is when the lower time frame now give us bullish movement to tag along with it. And our corresponding lower time frame for daily time frame is what? 1 hour time frame. So when we come to the daily time, the 4 hour time frame also, we want to use as our higher time frame to be monitoring price. Then we can also use the 30 minutes time frame as our lower time frame. So when our higher time frame is bullish, our lower time frame entry should be also what? Be bullish. Although in the lower time frame, if our higher time frame is bullish, in the lower time frame we will see that this white, okay, let's use this candlestick. This one that I drew here. You know the higher time frame here is bearish, right? Now when you come to the lower time frame, you'll be seeing this type of movement, like lower time frame will not be what? To be bullish. But any type of entry you want to take there may not be suitable for your trading, for you to be profitable. So lower time frame will be bullish, but our higher time frame is what? Is bearish. So our higher time frame is selling. So therefore, we should wait for an opportunity to sell in the lower time frame, which will now give us the higher time frame opportunity to be what? To be selling. Although in the lower time frame, as at this point of this white candlestick, this is just some pictorial representation. This is the higher time frame, the green arrow. Higher time frame is selling, but when we go to the lower time frame, this white arrow will now be what? Will be buying in the lower time frame. The white arrow signifies lower time frame, but by the time we are going to cash our entry to sell with the higher time frame, then maybe we'll catch our entry here. We will now sell this trade to move along with the higher time frame. So you can see that by the time you remove these white candlesticks, you remove them, all you have continuously have is what? Is a downtrend candlestick movement that will be happening in the higher time frame. The same thing applies to the higher time frame. When market is buying, you see that market is buying, that is the green candlestick in the higher time frame, but in the lower time frame we will see price selling. So at our point of entry, where price will give us a very good opportunity to enter, is when we now see that bullish movement in the lower time frame. That is when this white candlestick will fade out, then this green candlestick will take over. As we are buying in the lower time frame, the higher time frame is also what? Is buying. That means we are moving with the trend. So by the time you remove these white candlesticks, you see that you have this pure green candlestick, as price will be moving upward. Okay, so there are some people, they want to use different type of candlesticks. They want to use different type of time frame you see somebody using 15 minutes time frame as higher time frame. That is what my mentor taught us, using 15 minutes as higher time frame and then 1 minute as entry time frame. But you can see from the post I made on my Instagram post. So from the post I made on Instagram, you can see I talked about, this issue where 1 hour for 10 trading pairs or 10 hours for a trading pair with the same result. Which would you prefer? Okay, so in this type of scenario, there are some people, they just want to trade on the lower time frame, like maybe 15 minutes, and then one for your higher time frame and 1 minute for your lower time frame. But you have to be staring at the chart for a longer period of time before you even see your entry. And when you see your entry, it might fail despite all the time you are spending on the screen. So I will explain more on this later when I will talk about selecting the different type of currency pair to trade. Whether you should be trading one pair and spending a lot of time on it, or you should be trading a lot of pairs and spending little time on them. We'll be talking more on that later. Okay, so I made a chart here, like a little timetable, a little table. I said the number of trading times, or in this place I say time, you can say the number of trading candlesticks, okay, for the two recommended time frames, for higher time frame and lower time frame respectively in a month. What I'm talking about here is, how many candlesticks can you get for the daily time frame that we recommended and its corresponding lower time frame, which is 1 hour, and then for the 4 hour candlesticks, for the 4 hour time frame we that is recommended for higher time frame, and the 30 minutes candlesticks that is recommended for the corresponding 4 hour lower time frame entry. So how many candlesticks can you get in a month? You can also calculate it for a week, but the best way to know if you are profitable or you are not is to take your total result for the full month, whether when you are trading on the daily time frame and using the corresponding lower time frame, or when you are trading using the 4 hour higher time frame and the corresponding 30 minutes candlestick, 30 minutes lower time frame. You have to take your calculations on the chart in a month, and then you'll be able to calculate if you are being profitable or you are not, or you are making progress, or if you are not also making progress. So using a simple calculation, if you are using the daily time frame and the 1 hour as our entry, so on the higher time frame in a month, we know that this example I'm making here is for forex pairs and 5 trading days pairs. What I mean is this, for forex pairs in a month, we only have from Monday to Friday. Saturday, Sunday, you can't trade anything forex pair or all those stocks, all those other things. You cannot trade them. The only thing you can trade Saturday, Sunday is cryptocurrencies, or when you talk about synthetic indices, like all those, I'm talking about volatility 75, all of those. Those are the ones you can trade from Monday to Sunday. They don't have any stopping days. But our major focus here in my explanation will be looking at just the trading days, which is the 5 trading days, majorly for forex trading and stocks, all those. So if you are using the daily time frame as our higher time frame and the 1 hour time frame in a month, how many candlesticks? The number of candlesticks will determine the number of trading opportunities that we also have. Okay, so in the month we have 20 trading days. If you are using 30 days, there are some days, 29 days, like in February, all of those. No, we are just using standard 30 days. Out of those 30 days, by the time you remove Saturday and Sunday, you'll be left with 20 days. So 20 days meaning that we'll now be having 20 daily candlesticks for the daily time frame. We'll be having 20 daily candlesticks. Then for the corresponding lower time frame, we know that in a day there's 1 hour. There's 24 hours in a day. So since there are 24 hours in a day, for us to know how many hours will be there in 20 days, we just have to multiply 24 times 20, giving us for 480 hours. That 480 hours is equivalent to what? 480 hourly candlesticks. Okay, when we are using the lower time frame. So if I'm using this one, I'm just using it for a particular pair. Let's just say Euro USD, the popular pair, Euro USD or GBP USD, or even gold, or AU USD. So we'll be having 480 hours to look for opportunity on the lower time frame if we are using daily time frame as a higher time frame. Okay, so if we are using the 4-hour time, what if we are using the 4-hour time frame as our higher time frame and 30 minutes as our what, as our lower time frame? We know that in a we also have the same 20 trading days, but in a day, how many 4 hours do we have in a day? There are what? 6 4-hour candlesticks per day. So since there are 6 4 hours per day, we now have that 6 times what? Times 24, giving us what? 120 hours. This means that we have 124 hourly candlesticks for a whole month. 124-hour candlesticks. So meaning that the candlesticks that we print out to give us trading opportunities for a particular pair, we have to be 120 for us to see any opportunity there in a month for a particular pair. So what of the corresponding lower time frame? The 30 minutes lower time frame, in a day, by the time I just did the calculation, there are what? 48 30 minutes in a day. There are 48 30 minutes in a day. So if you calculate that for a whole month, we now have, which is our 20 trading days, 20 times what? The 38, the 48 that we have, giving us 960. So if we are using our lower time frame for our, looking for trading opportunities based on what the 4-hour time frame will tell us, what we'll be having there is what? 960 30 minutes time frame in a month. Those are the opportunities that the lower time frame can provide for us based on what the higher time frame, which is the 4-hour, will be telling us. We will now have 960 30 minutes candlesticks. Those are the opportunities. I hope this is very understanding all of that. I'm just trying to ensure that yes, we can see that we can make trading very logical. That is why I'm following this smart money concept, because it is the only thing that I see that is kind of logical. If you are not using indicator, there are people that are profitable with indicator, but if you want to use indicator, know that you are using indicator. But if you want to use price action, reading of candlesticks without any indicator distractions, you just want to see price the way it is, smart money concept enables me to do that. That is why I'm happy and sharing it with everyone also. All I want you to do is to practice, understand this, watch over and over again, share with someone. You can also be helping them in their trading journey. At the end of the day, everyone will be very profitable. I wish you the best. Have a great time.